The hidden trap of buy now, pay later, explained. You just bought that new pair of sneakers, that high end blender, or those concert tickets without spending a single dollar today. It feels like a magic trick, a free pass to get what you want right now while pushing the bill into the distant, foggy future. But this isn't magic. It is a multi-billion-dollar financial trap called buy now, pay later. Companies like Affirm, Klarna, and Afterpay have exploded in popularity since 2020. They are integrated into almost every online checkout screen you see. They promise 4 easy payments, zero interest, and no credit checks. It sounds harmless. It sounds like a favor from a generous retailer. In reality, it is a psychological weapon designed to dismantle your budget. Let's look at the mechanics of why these services are growing so fast. The industry is currently valued at over $150 billion globally. It is projected to reach nearly $4 trillion by 2030. That is not money being saved. That is an ocean of debt being manufactured by design. The trap begins with the frictionless checkout. When you use a credit card, there is a mental weight to the purchase. You see the total, you pull out the plastic, you think about the bill. Buy now, pay later services strip that weight away. They break a large, intimidating price tag into small, manageable slices. A $200 purchase suddenly looks like four $50 payments. Psychologists call this partitioning. It tricks your brain into devaluing the total cost. You aren't buying a $200 item, you are buying a $50 item 4 times. Your brain stops signaling the pain of paying because the immediate hit to your bank account is so small. This is exactly what the retailers want. Studies show that when buy now, pay later is an option, cart abandonment rates drop significantly. Conversion rates jump by 20 to 30%. People spend more money, more often, on things they likely cannot afford. But here is where the math turns sour. These companies don't make their money from you, the consumer, at least not initially. They charge retailers a fee for every transaction, usually between 2 and 8%. The retailer pays this fee happily because they know you are willing to spend more when the price tag is sliced into pieces. So, where is the catch? Where is the trap? The trap has 3 distinct layers. The first layer is the lifestyle creep phenomenon. Because these payments are small, you don't track them like a formal loan. You buy a sweater this week, you buy a video game next week, you buy kitchen gadgets the week after. Suddenly, you have a dozen different payment cycles overlapping. You lose track of when the money is leaving your account. You get an overdraft fee because you forgot a $40 payment was coming out on a Tuesday. The second layer is the hidden cost of late fees and extended plans. While many services market themselves as zero interest, that only applies if you stay perfectly on schedule. If you miss a payment, the fees kick in. Some services charge up to $8 per late payment, or even a percentage of the total order value. If you transition to their extended monthly installment plans, the interest rates can skyrocket. In some cases, these APRs can hit 30% or higher. That is worse than most standard credit cards. The third layer is the most dangerous. It obscures your debt to income ratio. When you take out a traditional loan for a car or a house, the lender checks your credit history. They look at your existing debt to make sure you won't drown. Buy now, pay later services often skip deep credit checks. You can rack up thousands of dollars in microloans across 5 different apps without any of those companies knowing about the others. You become over-leveraged before you even realize you have a problem. The industry argues they are providing financial inclusion. They say they help people without traditional credit histories get the things they need. But the data tells a different story. According to a report by the Consumer Financial Protection Bureau, buy now, pay later users are more likely to be experiencing other financial distress. They are more likely to be overdrawn at their banks. They are more likely to have poor credit scores. These services aren't helping the vulnerable climb out of a hole. They are handing them a shovel to dig a deeper one. Think about the timing. The rise of these services coincided with record high inflation. When the cost of groceries and gas skyrocketed, people found their paychecks shrinking. Buy now, pay later became a crutch for survival. It turned into a way to pay for basic necessities rather than luxury items. When you start financing your groceries or your utility bills through a third-party app, you are no longer managing your budget. You are managing a crisis. Consider the user interface of these apps. They are designed to look like social media feeds. They have curated shops, personalized recommendations, and gamified rewards. They are not financial institutions. They are retail tech companies designed to keep you inside the digital store, scrolling, clicking, and committing to debt. You are being sold the illusion of convenience while the cost of your future choices is being stripped away. Every payment you postpone is a future dollar you no longer have control over. You are literally eating your future income to satisfy a present-day impulse. The next time you see that Pay in 4 button, take a breath. Ask yourself a simple question. If I had to pay the full amount in cash right now, would I still want this? If the answer is no, then the only thing that has changed is the payment method, not the value of the item. We are living in an era where technology is being used to bypass our internal stop signals. The companies providing these services are betting on your lack of impulse control. They are betting that you will forget, that you will overspend, and that you will eventually rely on their credit to get through the month. Don't let them win that bet. A budget is more than just a list of numbers. It is your personal roadmap to freedom. When you fragment that map into tiny pieces of debt, you lose your way and you lose your autonomy. True financial health isn't about how much you can afford to pay tomorrow. It is about how much you own today. Is the convenience of a delayed payment really worth the quiet anxiety of a mounting invisible debt? That is a question only you can answer, but make sure you answer it before you click confirm. And if you don't want to get rich, don't click on this video on the screen.